Hello everyone, Jesse Farb here. It's the end of the second quarter and the Toronto Real Estate Board market stats are in. There's a lot going on. We've seen some Bank of Canada interest rate changes. We've seen some segments of the market performing really well. Others are showing signs of stress and issues that may be emerging. So in this video, we're going to jump into all the stats, whether you're looking at the 416, the 905, the low-rise market, or the high-rise market. We've got all the information to bring you current with where the market's at as of the end of the second quarter, June 30th, 2024. And with this information, you can hopefully make better decisions when it comes to your real estate decisions and investments moving forward. So feel free to like and subscribe. And now let's jump into the stats and get you up to date. All right, so let's jump in and look at the history of Toronto Real Estate Board MLS sales going back to the year 2000. In the year 2000, you can see over here, we were just shy of 60,000 sales for the year. And ever since that point in time, we've been above that 60,000 sales mark in terms of volume. And this is a measure of activity in the market, of course. We can see here a peak here in 2007 and then the great financial crisis of 2007, 2008 mostly hit the US and parts of Europe, not so much in the Toronto market or in Canada. We were pretty well insulated. We did see a drop overall in sales activity. Definitely the economy was affected. And then a rebound here coming 2009 with a peak here in 2016. In 2016, the mortgage stress test was introduced, and that certainly impacted affordability and cooled off the market. We saw there was close to, looks like 116,000, 17,000 sales in 2016, and that dropped down in 2017 and further in 2018. Then we started to see a huge run up coming into all the way into 2020, 2021. Interest rates dropped to extremely low levels. In 2021, at the peak, there was 121,000 and change sales. And then, of course, interest rates started to rise. That affected people's affordability and ability to qualify with the current prices. And we saw a huge decline in the number of sales and the sales activity coming off the 2021 highs, about 45.8% just in this area here from 2021 into 2022 and then further in 2023. And here we are in June, end of June 2024 with edging towards 37,000 sales for the year. So that's a little bit of the history about where we're coming from in terms of sales volume. You can see here, we're dropping back towards that sales, 60,000 sales volume that was back in 2000, coming at the end of 2023. We finished slightly higher. Where are we going to go in 2024? Well, we're going to look at some more stats, which may paint a better picture. But here we are, again, at the end of June, just over 36,000 sales on the year. So with the decline in sales, we might want to look at the correlation or just the overall price activity that we saw. And the pricing from 2000 to 2024 tells a little bit of a different story. We've kind of seen a steady progression here coming out of 2000, a run up here with a bit of a peak here, 2016, 2017. Again, the mortgage stress test was introduced there. So the average price kind of flattened out here. And then low interest rates really caused the last big boom, in my opinion, the frenzy that we saw in 2020 into 2021, where we saw the average price on MLS peak here in 2021 at 1.162 million. Again, these are averages for all MLS sales in all areas of all home types. So we're going to break down a little bit more of the details for the Toronto region versus the surrounding area, the 905 region. We have to kind of differentiate between detached homes, semi-detached, and of course condos are a different type of real estate to look at as well, a different sub-market. And then just to wrap up the average stats here though, in 2024 we've seen the average price decline down to about 1.123. So it's about a 3.38%. Again, these are averages. Some areas are up year over year. Some areas are down a lot more than 3.38% from the high. I know some areas are down, 10, 15, 20, 25%. So just giving you an overall state of the entire market on MLS. Let's drill down now into the current day, which would be, looking at 2023 to 2024. Less of a historical perspective, more of an immediate perspective. So again, the total number of sales on MLS is down from 2023 to 2024. 2023 is this blue line here, peaked here in May. June of 2023, there's 7,429 sales. June of 2024, we're down to 6,212. So a decline there in the number of sales, not huge, but significant. And again, our total volume of sales is down dramatically from the peak of 2021. We'll see where we end up at the end of this year. It looks like we could still be, from the trend line here, you can see we're much lower moving down. There are some interest rate cuts made by the Bank of Canada already. There may be more to come heading into the fall. And that might actually spur some more sales activity where we see this orange trend line break above the blue trend line finishing out the year. And so we may end up somewhere in the 60 to 70,000 range again for this year in terms of the total number of sales. The average price on MLS, if you can believe it or not, is actually up as an average slightly, about 0.8%. You can see the numbers here for the average price in 2023 and the average price in 2024. So not a huge change there. And again, if you look at the pricing here, the blue line is 2023, peaking in May. In 2024, we actually had more price growth year over year to start the year. In February and March, prices were up year over year. They kind of evened out in April. May has been under the performance or average price of 2023, and June as well. So same story here. We're pretty much neck and neck year over year. We may see this orange line kind of continue on flat though. We might not see further declines or less of a decline, if any, moving forward with the change in the economic environment. So I expect the year may still finish up positive between 1 and 3 or 4% on the year as an average. Having said that, we have to really break down the different areas in the city because averages include all these areas when we look at the stats. So if we looked at just Toronto, we'll call it the 416 area, highlighted in green here, and then we looked at all the other areas we'll call 905. That's Durham Region, York, Halton, Peel, Dufferin, Simcoe. Let's call all of those the 905. We're also going to break down the regions by home type. So the low-rise market, which would be all your detached, semi-detached townhomes, and the high-rise market, which would be your condos typically. And we're going to look at the stats in both the 416 and the 905, low-rise and high-rise. And starting off in the Toronto low-rise market, home sales are down about 12% year over year. There are less homes selling in the city of Toronto, detached, semi-detached homes, than there were a year ago. You can see the trend lines there. Again, blue is in 2023 and orange is 2024. As of June, you can see there was about 1374 in 2023 low-rise market sales in June, down just over 1,200 there. So not a huge decline, but still significant, especially when you consider where the trend line might be heading. We'll get more data as we get into July, obviously August and September, and then we'll see the Q3 update and see where we level out. Again, I may tend to think that the number of sales is actually going to kind of exceed 2023 overall as the market starts to absorb lower interest rate costs and as sellers who need to sell are used to the pricing that they might get. There might be a happy medium there where the market starts moving a little bit faster than it has been. We shall see. But having said that, the pricing on the year is actually up just over 1%. So I feel like, if anything, prices are probably going to start to stay consistent here, if not rise, as we experience lower interest rates than we had a year ago. The average price in 2023 was $1,474,000, and in 2024 so far we're at $1,493,000. So not a huge change. Again, these are averages for the year. You can see here the seasonality of peaks in pricing and then drops in pricing, as well as the impacts of the economy, interest rate environment. In June, we're kind of following the same storyline here. June of 2023 was actually slightly higher, and we're trending below the pricing of last year. We just had a little bit of a stronger March, April here, you can see, which gave a little bit of a higher price growth for the year, but it's pretty close, a percent either way. We'll see what happens again as we move into the summer and get the stats in from the summer market. The total number of sales on the low rise in the 905 region is very typical kind of what we saw, a little bit less than last year. You can see the orange line here trending well below the 2023 number of sales. But this trend line, again, may stay above where it was in 2023, and it could be a year very similar to 2023, where we see about 35,000 plus or minus sales. Right now, already in June, we're at just under 20,000 sales in the market. This is for the 905. So kind of steady with some declines in sales coming into April, May, and June from last year. But again, we started the year higher up. So this is kind of all averaging out to a very similar year so far. The pricing is a little bit different. The average price in the low rise 905 is down 4.6%. So the average price in June in 2023 was 1.289 million. In June 2024, it's down about 60,000 to 1.229. So again, continued price declines year over year. This may continue to hit the market, especially in the 905 area. We saw a lot of areas drop initially from 2021 to 2022 and 2022 into 2023. So there still may be more to go. There is incredible price growth during COVID, especially in the 905. Remember, everyone wanted to move out of the city. They wanted to get bigger backyards. They wanted to get bigger space, more space, and that drove a lot of unprecedented price growth in the 905 low-rise market. Now, coming to the 905 high-rise market, we're seeing the high-rise market get hit the hardest. The number of sales are down close to 12% year over year, and the trend is looking like it's going to head even on a steeper trajectory down. So sales volume have definitely been impacted in the 905 condo market, and we'll see if we get back towards this 6,000 of 2023, 6,300. Remember, just because we're halfway through the year at 3,500, you don't just double that, because October, November, December are much slower months than, let's say, March, April, May, June typically. So the fact that we're below the trend line here into coming to July, August, and September, I suspect we're going to end up with less sales. The one saving grace, again, is the Bank of Canada has begun cutting interest rates. There may be further rate hikes, rate decreases, rate cuts. So we might actually see an uptick here in October, November, December, ending the year, depending on what's happening with the rate environment and the economy. On the pricing side, not too much change year over year. Again, a lot of the change already happened from the initial hiking cycle in 2022 to 2023. We are seeing average prices down 2.5%. Price for this year seems to be flattened out. Not so much any kind of growth that we saw in 2023 just yet. So I do expect prices may kind of continue along this, but we might see again some spikes coming back into September, August, September, where we start to see this orange line peak above the 2023 pricing line, and we might end up with average or flat pricing, even an outside chance of some growth. We might actually see a later fall and into winter market where, you know, affordability returns at these price points. The other way it could go is obviously, we see sales continue to decline, active listings continue to increase, and we could see further price decline. So the next quarter is really going to tell a lot about how soon these interest rate cuts are hitting the market and whether they're making any significant difference. When we look at the high-rise market in Toronto, we're seeing a similar trend line here. There is 12,789 sales in all of 2023 in the Toronto high-rise market. Right now, we're at end of June, 6,681, and looks like we're going to be trending much lower for the year. This is a pretty steep decline coming into June, and not only that, but we're seeing a lot more active listings pile up here in the high-rise market in Toronto. So we're going to go back to 2022, where you can see the orange line here, active listings ended the year at 2287. In 2023, active listings ended the year at over 3,000. That was a almost 33% increase in active listings in the Toronto condo market, or the high-rise market. And this is the area that I think has the most vulnerability. As we're seeing active listings rise. When we look at 2023 to 2024, we've almost doubled again. So active listings have now gone up another 85%. In June of 2023, there's 3,340. June of 2024, over 6,000. This is and still heading upwards. So I think the Toronto high-rise condo market is the most vulnerable right now. With all these listings coming on board, there's a lot of investors that want to exit the market. They've got negative cash flow, and the buyers are not buying at these prices. So these listings are building up. They're not getting absorbed by the market, at least not very quickly. And this is, again, looking at 33% increase from 2022 to 2023, and another 85% increase on top of that year to date this year. So definitely there's going to be some opportunities for investors and buyers in the Toronto condo market. The counterweight to this, again, as I've mentioned, is Bank of Canada interest rate cuts. Those will take time, and there's only 2 cuts so far. If we got to 3, 4, 5 cuts, maybe into the end of this year, 2025, we might see some better absorption rates here for people wanting to enter the market. So keep an eye out on this one, on the Toronto high-rise market. When we look at the pricing so far, that it's obviously what people are looking to see shift dramatically. We're actually seeing a little bit of price growth that we saw coming into March, April this year. Average pricing was higher into April and then leveled off in May. And then June has got a bit of a decline. It looks like we're going to hit pretty much year over year, very little price change. You can see here we're talking about less than $10,000 in average pricing, ending this quarter. And this is exactly where I think we're going to be coming to July. The big question is going to be, with all those listings, who needs to sell, and are we going to start to see steeper price declines, average price declines, or something more flattened out where we actually might end the year up, but we're talking, like 1 or 2% positive, or in the worst case, though, if these listings keep piling up, we'll see sellers have to sell at lower prices, clear some of those properties on the market, and then we could see some price declines by the end of the year overall in the Toronto high-rise market. So that is it. You're up to date now on the second quarter. If you want to learn more about the Toronto real estate market in Southern Ontario, you can definitely request our big picture real estate report. This is looking at overall, like, the more historic trends of why we've seen real estate prices grow to the prices that we see today, what's happening in terms of supply and demand of housing, what are the issues impacting it. So you can definitely learn more about that. A lot of it is obviously driven by Canada's population growth, and the GTA, as one of the largest city, the financial hub, experiences tremendous incoming residents who need dwellings, they need places to live, whether they're homes, condos, basement apartments, or anything in between. So if you're interested in learning more about where the real estate market is heading from a macro perspective, this is an excellent resource. If you have any questions, feel free to call, email, text, and I look forward to speaking with you next quarter.